So this is a training on how to answer the question related to um, when someone says, "Do you do renovation loans?" Okay. So actually, Ryan is helping me put this together. So what I may do, Ryan, is actually I'm going to just type up a few notes as well on just talking points, and then we can actually go through the numbers. But in terms of talking points, and if you can maybe help me like kind of put this together maybe in a more training format for the next time we go through it, is when someone asks, do you do renovation loans? We will say yes. Okay. Technically, though, we don't do renovation. I mean, like we don't do home improvement loans. And even then, I don't like doing renovation loans because they're a pain in the ass to do. But the answer is always yes from a training because of sales standpoint. Okay. So we're going to say yes. But then we need to explain the difference. You have a renovation loan and you have a home improvement loan. Okay. So what we're going to say is, yes, we offer several different types. Okay, we can set up a loan consultation, with Jackson, and he'll walk you through the options. And then eventually I'll get you trained up to where you feel comfortable walking someone through the options to discuss the options. Okay. So first off, you have a renovation loan, and second, you have a home improvement loan. So it depends on your situation, the pros and the cons of each. Okay. So like on a renovation loan, the pro is that it is one loan amortized over 30 years. Okay. So like just it is convenient. Okay. Because it's one loan. It is definitely a better interest rate than a credit card. Okay. So if you were going to do the renovation on a credit card, definitely better than that. Okay. The con is typically takes 45 to 60 days to close. That is tough to sometimes get done in this market. Okay. The other con is that it is a higher interest rate because it is a blended rate. Okay. So typically the rate is 0.5% higher than the current market rate. Okay. So for example, the current market rate is 2.875. That's probably going to be a rate at 3.375 to do the renovation loan. Okay. The home improvement loan is the pro. It is a lower interest rate overall, and typically depending on the size. And we'll say depending on the size, because typically if they're going to go over 50,000, that's where I feel like the renovation loan starts to make sense. Under 50,000, I think I typically would recommend a home improvement loan. It's different for every single case because it's different on the size of the loan and the purchase price. But generally speaking, I think you're going to have a lower interest rate because if we do a home improvement loan, I can give you the 2.875. Like I can give you the going market rate on the mortgage, right, which is usually a much larger part of the loan. So it might be like 300,000. I can give you a rate at 2.875. But then we might do a lower, then we have like the lower loan amount. Let's see, I'll give you the current market rate on the mortgage. Lower loan amount of home improvement loan is going to be higher. Okay, so it's going to typically be in the 5% range. Okay, but the overall blended rate is lower typically because you may be paying 5% on a $30,000 home improvement loan, but you're paying 2.875 on the $300,000 loan. So in most cases, it's a better deal to do it that way. The other pro is you break it. It is that you can close on the mortgage in 30 days or less, so to be competitive, and then you can close on the home improvement loan after closing that, and it takes 3 to 4 weeks after the deed is recorded, showing that that you're the owner. You have to be the owner to take out a home improvement loan. Okay. I also think it gives you more time as a customer to think through what you really want in the renovation. The problem with this taking 45, 60 to 60 days to close is not because it takes us 60 days to close a loan. We'll close a loan in 30 days. The problem is customers cannot decide what they want for 2 to 4 weeks. They get under contract on the home, they walk the home, and then they're like, well, do I want to do cabinets and the kitchen and the bathroom? Do I want to do tile? how much am I doing on the countertops? Like, is it a $30,000 renovation? Is it a $40,000 renovation? You have to choose a general contractor. You have to get plans and specs. You have to get blueprints. You have to get bids. You have to get it all finalized so that you can give it to the appraiser. So then the appraiser can then determine, hey, if you buy this house for $350,000 in renovation, is it really going to appraise for $350,000? Because as the lender, we have to appraise it on, like when you do a renovation loan, we have to appraise it that way. So the thing is, we could close a renovation loan in 30 days if on day one you had all that done. Like you had your general contractor picked out, you had your plans and specs, and you had your budget. Then we could move. But I've never met a buyer who could do that. Maybe if they're an architect or currently they work as a general contractor, they get the industry, they're educated enough to make quick decisions. But if you're a first-time home buyer, I think this is a better option. It's less stress, in my opinion.
So what about, do you need to have an appraisal done on the home improvement loan typically?
No.
So there's not going to be any appraisal issues besides?
Typically not. There might be, they may need it. So like if we go to, for example, certified is one of the ones I typically recommend just because they're the most flexible. They'll go up to 125% LTV. But like look here, like I don't really see a need. Oh, appraisal must be ordered, right? So they do order an appraisal. Okay. Okay. So, but they'll go up to 125% LTV. So my thought is typically I'm going to tell them stressful because have to make decisions very quickly. Less stress because more time to make decisions. Okay.
So do we need to quote to appraisal fees?
The con is you have to do 2 loans. That's really the only con in my opinion.
And do we need to quote for 2 appraisal fees in that case?
Yeah, we would. But so let's go to the numbers, right? Because that was the next thing. So we go here. So 300,000, right? So let's say we do a 5% down, $300,000 loan, and okay, yeah, this was I think quoting rates earlier in the year when rates are a little higher, right? So 3.5 was the going market rate, right? The 5% down on a $300,000 house, be a payment of $2,087. Okay,
that's just a regular loan, right?
That is right. This is just a regular loan. Okay, so then we compare that to doing home style.
And home style is the renovation.
Oh, wait, hold on. We got to compare these two. Yeah. All right. Home style is the renovation, right? So yeah, and here is a flyer I'll send you that explains you got Fannie Mae home style renovation, FHA 203K standard, FHA 203K limited. Okay, typically the difference is $35,000. Okay. So these are kind of your different programs. So, and it kind of gives you an understanding of what all you can do on it. So I'll, send this over to you as part of the training. But what I would say is, hey, if you want to put 20% down and buy a home for $300,000, okay, the monthly payment is $1,795. Okay. Now what you could do is you could say, hey, I'm going to buy a $200,000 home, but I'm going to do $100,000 in renovation. So my all-in budget is $300,000, right? So we will set up the loan based on a $300,000 budget. $200,000 purchase, $100,000 renovation. We call it a home style renovation loan. The rate is going to be about 0.5% higher. So now your payment is $1,880, but the budget is about the same because, okay?
Right.
All right. Now what you could do, in my opinion.
The only thing that would change in that case is the rate.
That is right. Yeah, the rate now. Also, I don't know. Let me see if I put this in here. Home style has some additional fees. Did I put that in here? You typically have to do. I guess I didn't. Best job of setting this up. I'll have to get the training, but typically if the budget goes over $35,000, you have to put 10% in reserves. So what happens is you actually have to finance an additional, like we do $110,000, and you typically you either finance it or you have to bring an extra $10,000 to put into the account. So like basically you bring $77,000 to closing, and we put $10,000 into an account in case you overrun your budget. We can pay the contractors. If you don't overrun your budget, then we just refund it back to you once the project's done. So in my
Okay.
experience, the closing costs are actually much higher on this than they are on a home improvement loan. So in my opinion, that's another reason to not do home style is you got to put like 10%, you got to put 10% in reserves. And you have to pay for, if you do FHA 203K, you have to pay for a HUD counselor fee. You have to pay all these certification fees.
And so
And
what's the minimum down payment for those renovation loans?
5%. You can do 5% down home style, or on 203K, you could do 3.5% down, right?
Okay.
So like if you go here, does it
And
say
it doesn't have it there.
LTV? Dude, I guess this does not have the LTV on here. I need to get a better flyer. We probably could go into the peak. I bet you this is my old company. That's probably this is like from like 4 years ago.
Uh,
Go onto the peak. They probably have the LTV, but I know what the LTV is. It's the thing that's nice about it is it's a maximum thing. So part of the reason why most people promote it is because they don't have somebody like certified. Like certified, I can do 5% down or 3.5% down and still do the loan. But certified is the only one in town that will do this. You go to Frost Bank or IBC, they only do 90% CLTV. So you have to put down at least 10% and maintain 10% equity to do a home improvement loan. So
right.
part of the reason why I can kind of get away with not having to deal with the pain of a renovation loan and have to jump through these hoops, which because as like it just is you just have to become more educated on it. It's like doing USDA or new construction, like all these different things. They're little nuances. Once you learn them, it's okay, right? But like there are some nuances to these two like types of loans, and they're not saying you can't do them. You can do them, but they're just kind of a pain. So in my opinion, closing a standard mortgage and then referring to certified after closing has always been an easier solution for me. And so if we walk through the numbers with people, so I think what I'll do is I'll give you these talking points, right? So you could kind of use some of them, start to get you a little more educated on it. But then you still need to just refer them to me, and I'll set up the call and I'll walk them through these numbers.
And you were
But
saying any loan amount over or any renovation loan,
as
or
a
any,
general rule, I would say if your renovation is going to be more than 10%, 10 to 20% of your budget, it might be worth looking at Fannie Mae home style renovation. Because like if you
right.
start to do $100,000 renovation, this becomes sometimes more challenging to get approved,
But the 10,000 in reserves. What was that rule again? Can you explain that to
yeah,
our
so
audience?
Fannie Mae home style, my understanding is that you have to put, dude, I gotta hop on this other call. Not just the reserves, you have to like put some money in there in case you overrun your limit. And my experience, it's usually been like 10%. And then you get it refunded back to you, but it's like basically like setting up an additional escrow account. I can't find it right now, and I got to go hop on this other call.
Okay.
But I would just make some notes on that. I'm gonna stop recording now, so that way we'll save